Hey, it's Steve Zalunardo here at Treviso North Realty. Happy Monday morning. Just going to give you a quick update on the current market. As I mentioned on Friday, we're not going to talk about all the obvious stuff that we've predicted years in advance and obviously everything's going forward. It's no point of going into negative stuff. What we're going to do is we're going to still focus on the inventory, and then we're going to talk about how to get out of the situations that we're currently in right now. So inventory, 31,490 units, high as hell. Clearly we don't know where this is going to cap. Is it 35? Is it 40,000 units? We are still adding 1,000 units per week, and then the sales are obviously down. So it is what it is. But again, our showings on our properties, some are steady, some are dead, some offers are coming in. We're still doing deals. I think we're probably maybe like 55 to 58% complete of our goals this year, let's say financially, which is good. So we're on target. And again, we knew it was going to be a hard year. But going forward too, what we're going to do is we're going to create webinars. We're going to promote a webinar coming out on June 8th rather. It's basically a strategy session on the current market today and what to do to mitigate and going forward, because we want to make sure all our clients are whole. And this is going to be not a typical webinar where we're selling stuff to you like services. This is like, I'm a real estate agent. If you trust my opinions, you trust we're going to work hard for you, then hire me. If you don't think I'm the right fit, then don't hire me. So ultimately, we know what we can do for clients. We have great track record, so we don't need to sell you on the services. On my photos are going to be better than the other agents' photos because they're all the same. It's just, who do you want to work for you? So ultimately, what we're going to have is just a conversation. It's going to be me, Mike, obviously the realtors, our webinar, and then we're going to have a mortgage broker on the panel, and also a mutual fund manager as well. So what we want to talk about is what to do now in the current market. If you need to, obviously we want to have the mortgage agent on staff as well. And it's not about him selling you products, it's about him utilizing products for your needs. If you need to refinance this to kind of get some float, then there's an opportunity for that. Do you want to get a line of credit? What's the cost associated? What's the process? So because some people are looking at it. We know that a lot of people are refinancing now at these much higher, well, the rates are still pretty decent, but higher than where they were in the when they originally taken in their mortgages, so their prices are offset. Clearly, we know a lot of people are losing jobs. It's not a very good market right now. So, but we can utilize, let's say our mortgage broker, kind of go through that with you, and then ultimately our mutual fund manager that we're going to have on staff as well. Part of this panel is basically, if you did sell your property, how to move the money around, put it into safety, make sure it's still there. Because owning real estate right now in Canada, it's a depreciating asset. I don't know. It's kind of weird when I talk to people and they don't know, they're not paying attention to the future. And it's not like I want to be pessimistic because we run a business on both sides of the border. I really don't care. Like I have no emotions to anything, and I'm not attached to anything. That if it doesn't make sense, I'm not going to get attached. So it's like if someone votes and it's always in that one party and it's a disaster of a party, I'm going to switch sides. It's like hockey teams. You know what I mean? Like you're going to go for the winning team every time. So ultimately, what we're doing is so just going back to this thought. Sorry, I lost train of thought. I don't see the light at the end of the tunnel. And when I talk to friends, family members, and clients, they don't realize where this whole economy is going. And then you talk to elder statesmen, let's call it, people that have done extremely well in good markets, and then obviously been through the ups and downs of the crashes. And then you talk to them, you're like, and they're like, well, it's going to come back. And then it's just like, okay, what data? What do you got? Give me something. Maybe I'm missing something. If I'm missing something, give me some information so I can adapt that, upload that information and change, my trajectory and thought of what the economy is. And it's almost like people talking with Tourette's, of like an echo chamber of the years past. If you kind of look at where we're heading, and it's just based on the bills that are passed and everything that's going forward, you just remember that carbon tax is a big deal. Okay? I don't think people understand it. That creates poverty no matter what. You know how you create a rich nation? Energy. More energy, richer nation. Less energy, poorer nation. Just sum it all down there. When you got an energy agenda where they want to go their carbon footprint to zero, which is insanity, people are gonna suffer. And who suffers? It's gonna be us. So anyway, you talk to friends, family members, it's not, they're kind of pushing it away thinking it's going to come back. It's not. And if I'm missing something, please message me, because I'd love to change my thought on that. So what we see now is just going to be that that drop. I think probably 20-25%. You're going to see a drop off in values, and then we're going to hit that stagnation, that steady line of no improvement, that Montreal effect going forward, like a European state. So that's what we see going forward. So if you have any investment properties, anything you don't want to hold on to, get rid of it. Try to get it cashed out, put the money in. This is why we're going to have a mutual fund manager on it. Maybe you can stick it into like a secured GIC where there's zero risk. It's going to pay 3 to 5%. You put $500,000 in there, and you're making $25,000 a year clearly, and that's what it is. That's what you want to do, is kind of have appreciation on the money, not, or getting paid on your investment, not and a depreciating asset. And just try to explain this even to family members. Holding on to a property, it's depreciating. So if you bought it at X, let's say 400 grand, and now it's worth about 680 to 700,000, it's $300,000 in equity. By next year, that might be 550, 580, and now you only got $180,000 of capital, which you lost $120,000 that could have benefited your children, universities. It's a whole thing to this. It's not. You got to look at the impact it's going to cause your family if you don't cash out now and kind of sit on that money until things kind of settle in and you can move the money around. But anyway, we're going to do that webinar going forward. So there'll be the strategy session. We're doing the webinar, Canadians Moving to Florida. This is by popular demand. We're getting a lot of messages, emails with people that missed it or want to attend it or want more information, because a lot of people are considering on the move. We've had a lot of activity out this way, which is fantastic. And yeah, we're going to do some of these webinars probably maybe once a week, different versions of them. Also the investments into Florida, because not everyone wants to leave Canada. I get it, because they're attached to family, but they also want to move money outside of Canada. So what we're going to do is to provide like small webinars for mom and pop investors that want to buy like a small townhouse, $250,000-$260,000 US, and then cash flow $500 per month, and then at least it's a safe investment. It'll appreciate and it'll do its job out here. And then also we have a management company, so we would settle that and protect it for our clients. But that's pretty much it for a Tuesday. Have a great day, guys. Bye-bye.